It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, joining us to take us through those charts. And here to take us through today's picks and those trades, Jessica Inskip, the Director of Investor Research at stockbrokers.com. It's great to have you both with us today. Jessica, we'll start with you. Just a big picture thought on the market and its performance this week as we head into that all-important decision tomorrow from the Fed.
Yeah, absolutely. We're hanging on that all-important decision from the Fed, and I think it's going to be very important to pay attention to tone. The market is absolutely pricing in the 25 basis point cut. I believe we're going to get that, but if it's going to be a hawkish cut, is there going to be a signal of future rate cuts? And that's what I'm going to be paying attention to, and what I think the market's really going to react to. The presser is extremely important as we're trying to understand this data. How is Powell and the committee interpreting that data? And that will definitely shape what we're looking going forward. But outside of that, there's an IPO pipeline that's heating up. We have increased chatter of M&A activity, and there's still an AI narrative going on, as well as this new blockchain tokenization and crypto with what's happening with the administration. So a lot really in the works and a lot to pay attention to.
Lots of headlines to always keep track of, but I do want to kick things off with your first pick today. Citigroup, an outperformer year to date, about 42% up year to date, more than 70% in the last 12 months. Why is this your first pick today?
Yeah, so I ran a couple scans this morning, and 2 of those scans was a dividend scan that's just looking for high quality, growth oriented securities. And then the other was pure growth, and Citi showed up on both. So that's why it came out as my number 1. So first of all, there is a headline that's important to take into consideration for Citi. Citi is this turnaround story. So this is a longer term investment play that's certainly playing out, as we can see from the overperformance up 42% versus 12.5% for the S&P 500. But they have global expansion, and they announced, along with other big banking partners, ahead of Trump and the administration going to the UK today with the next couple of days, talking about some trade deal agreements and investments that are happening there. And Citi is a component of that story. So that helps really this narrative of the turnaround that they have. Now, as far as why I want to add it to my portfolio, it really came down to that high quality dividend scan. They have a 2.41% dividend yield. I always look for free cash flow per share that's greater than that annual dividend amount. They check that box. They have a payout ratio of about 33%, which means there's still room for growth opportunity, and they have a history of a dividend growth rate. The most recent actually increasing that dividend was after the bank stress test, which could be another potential catalyst for them as we get more deregulation within the banking sector.
All right, Rick, so with all that said, take us through the chart for Citigroup.
My anecdotal observation, hard to make a case against the big banks in general here, but Jessica made so many great points here. From the technical perspective, though, we have a situation of intraday highs we reached today above that 100 mark. Backing off a little bit here, we can see that the recent price activity has been somewhat of a rising wedge type shape. We have our white trend line going across these recent lows that we established, matching up with that 88 level. That's about where we topped out and bottomed out here. And, these are general areas we're looking for. If you're expecting price to stop on a dime at the line we're drawing, that's not really how it works. It's more just general areas of support and resistance. Now, we have our sloping line on the lower edge of our price activity. You could draw an accompanying line going across those highs to give you more of this wedge shape where you have the steeper activity with the lower line and the more moderate activity at the upper line. Usually regarded as a little bit more bearish, but in this case, pushing over to the upside. So it'll be really interesting to see if we can hang on to this level here, our green line, 96, a repeated series of highs that has been breached. It lines up with our trend line. It lines up with our 21-day exponential moving average now. So that would be a notable supportive area to consider. Notice as well, RSI breakout beyond its downward sloping red trend line there. So RSI momentum favoring the bulls at this time. Finally, to look at our volume profile study here, we can see that our 96 price level, our green line, matches up with this node, this heavy trading area. So this is even further emphasis on this as a supportive level. We have a confluence two of our indicators right around 91 to the upside. 102.15 plus 1 standard deviation channel could be a place to watch for potential resistance.
All right, and with that said, we've got Citigroup trading right at $100 right now, so just up slightly on the day here. But Jessica, let's move on to your next trade. T-Mobile is your next pick here. They are not an outperformer on the year so far.
That is absolutely correct. They are not. But I think it's this innovation pipeline that they have expanding into 5G broadband, some newer services, some satellite. But what really caught my attention is the monetization. Their revenue growth for the second quarter came in very large from strong postpaid performance, and it's really about pricing power. So their average revenue per account was up 5% year over year. That's the best for them in 8 years. So that's definitely a signal that this could be a growth story. And in addition to this also came up on that growth scan that I was scanning for stocks this morning to bring, of course, to the show. So I see there's competitive positioning for them. Even outside of Verizon and AT&T, it's helped them capture more market share. We're talking more about T-Mobile, and they've got additional revenue growth drivers, with analysts forecasting about 6.5% growth through 2025. It's going to slow down a little bit, 5.3% in 2026. So there are definitely some headwinds for this. We want to see continued pricing power. If there is more strain on the consumer, that could be of concern. But due to its underperformance and that average revenue per account increase is what really caught my eye. I think it's something we can add to the portfolio that's not so concentrated in technology and those big mega cap stocks.
Yeah, and what you mentioned there, we've been talking a lot as we talk about some of these telecoms, and T-Mobile has a very different approach to everything with their heavy promotions and simplified pricing plans. So, a lot of potential for them here. But Rick, is the chart indicating the same thing, some potential upside for T-Mobile in terms of the technicals?
Hey, there's always potential. But in this case, we're at an interesting point. We're at a supportive area here, I would say, because we had our earnings event here gave us this gap up. That's roughly where we had the high before that, right before that gap up. That's around where we formed some lows here, testing that level around 240 today. But the day is still, young. We've got a lot of time before we head into the close still. So longer term picture here on this chart would be you could draw a trend line starting all the way back here with this low point here, connecting these subsequent lows. Once again, general areas here, line of best fit, not supposed to match up exactly here. But that would line up pretty closely with our purple 252-day EMA. So around 232 might be a further supportive area to consider based on those indicators here. To the upside, we had a ceiling that we have yet to make a convincing breach above. 258 was our gap level here based on this earnings event. That's about where we topped out recently twice. In terms of closing prices, we did manage to squeeze out one close above that 258 level, but it was not to be. We collapsed once again here. Now, you could draw this short-term downward sloping trend line in white. You could also see our moving averages are clustered quite close together. So a push beyond 245, 246 would be the first stepping stone to retesting the 258 level here. Now, a brief look at our volume profile study here. We are right about at the point of control, 239 or so, the area of heaviest trading. So this is a key area to hold based on that, metric there. This is the congestion area that the bulls would be trying to defend potentially. The -1 standard deviation channel as well is just below, near about 235.
And right now trading at 237.77 for T-Mobile. Now, Jessica, let's get to your last pick here in the big three. You've got Alphabet, Google as your last one, a name we've talked quite a lot about in the past couple weeks here with their favorable DOJ ruling.
Yeah, absolutely. Google or Alphabet, one day I'll say the name correctly. What I find very interesting about this and the overall AI narrative is the end goal, of course, like when we had the introduction of the internet and Google really dominating that space, is targeted ads. How is AI going to transform targeted ads? There was a wonderful study by Meta where they did it in India with actually financial short form videos showing that utilizing the algorithm to do those targeted type of ads is showing positive results. So I think there's going to be this convergence, and I want to see how Google plays into that. And what really caught me is Gemini. So we're in the middle of September, which means we can get August search results across all of its peers. Google was still very stable, but if we look at AI site traffic, that Gemini came in at number 2. Now, since we had this ruling, it's become a tailwind because now we could see more happen with Gemini, perhaps some additional ad spend, and that could translate into quarterly results and have better quarterly results. So what I'm looking for now is their set key KPIs. Are we going to see traffic increase? Is that search share going to increase? Are we going to utilize that AI mode? And how does that lead to targeted ads translating into revenue and spend that we see from other companies. And then, of course, daily active users, we want to see that increase. So I think there's still a lot of opportunity for Google. Their entire revenue structure is not based just off of ads. We got to remember they have YouTube and they have a lot of other components that really link into that overall AI narrative. So I think there's still a lot of potential for Google, but what we need to pay attention to with the AI narrative is consumer spending and AI ad spend. Where is that?
And interesting you bring up Gemini. I saw the numbers from the weekend, and Gemini actually surpassed OpenAI for downloads over just this past weekend. So still number 2 overall, but creeping up, like you mentioned, and I will always call it Google and Alphabet in the same sentence, despite it now being Alphabet for a decade. Now, Rick, as we take a look at the trades, as we take a look at the charts here, what are we indicating here? Obviously seeing that huge uptick in the wake of this DOJ ruling.
I also marvel at, think of how many hours of content Google has because of YouTube they can use to train their AIs and this, process of identifying consumer behavior and ads. It really is staggering to think about. But so what we have here, 207 level, if we backtrack, that was a notable high point. We pushed above this smaller range here near about the 200 level or so. Then a gradual bottoming out. Our low point came around the tariff news shock, sort of a cup and handle type pattern here. We had a brief pullback here, and then we had a push beyond the initial resistance level to give us this coffee cup-like shape here. So we did retreat to the 21-day EMA right around that level. You could also have drawn this trend line here going across the lows that matched up around that same area, right around that 200 level. So now, though, whole new regime of price here, gap to the upside. Now our low point comes in just below 225, our green line here. So once again, we have a matchup with our 21-day EMA at this level as well. That one comes in at 226.50 or so. So this confluence, if we do test it again, will it hold on? But in the even shorter term here, another gap to follow around the 241 and 242 level or so. That would be the first level of support to consider here in the very short term. RSI also looking quite strong, still above that overbought area, still trending upward. Green trend line still in play as well for now. Quick glance too at our other studies here. Well, not too much help this time around for the volume profile. The bearish activity here you could identify maybe around that 240 level, but we are at the +3 standard deviation channel right now. That comes in at 251. 3 standard deviations above our fair value linear regression line. Something to think about.
Well, thank you, Rick. And like you just mentioned, trading just below that $251 mark right now, down just slightly on the day alongside the rest of the market. But I do want to thank you both for being with us for the big 3 today. Jessica Inskip from stockbrokers.com and Rick Ducat, thank you both for being here.